Well, I think when we got into the office this morning and what happened in Asia this morning, we basically thought we were going to have a positive day. And by 9:30, it was all bets were off. Markets kept tumbling, and we saw the Italian bond yields shoot out quite aggressively. And I think it was the European banks that were trying to get rid of all the Italian bonds that they held, and markets just tumbled. And I think it was across the globe, and we were not immune to that as well.
Is it just a knee-jerk reaction at this point in time? I mean, a lot of people were saying that we were waiting for Silvio Berlusconi to actually want to step down, and that is now imminent. It's basically happening. Is there going to be a default down the line? What are you pricing in right now?
Look, it's very difficult to read. What we think is that there might be speculators in the market, and it becomes a self-fulfilling prophecy as they get rid of the bonds, and we've seen that yield shoot out. What we don't understand is that we haven't seen the Stability Fund or the European Central Bank step in to pick up those bonds and try to provide some stability in the region. So that's a bit of a concern. Whether there's going to be a default is anybody's guess. But what's for certain is that we're going to see volatile markets for the foreseeable future.
We've also had a bit of corporate news out today. AngloGold Ashanti, of course, out with those third quarter numbers that we were alluding to a little earlier today, and coming in far better than most had expected. Flat, slightly to the negative, ending the day at 380 Rand. Yeah.
Look, I think it was a mixed bag. Production was flat, but you had strong production out of the African region. If you look at the Gator mine, that was up. Production was up 39% or there. Overall in Africa, it was up about 9%. The Americas, that was up 10%, but cash costs there increased marginally. I think that was up about 8%. But if you look at South Africa production was down 9%. Now you've had industrial action in the country, as well as safety-related stoppages that saw that production number pull back. But overall, the results were pretty good. If you look at the overall cash cost, it was at $737, and the gold price received was just over $1,700. So that was positive for the company. And I think for the first time, they've declared a quarterly dividend of 90 cents, bearing in mind for the previous 2 quarters, it was 90 cents. This quarter is 90 cents, and they're speculating that the next quarter will be 90 cents.
So positive from them. Quite good.
Yeah, and I think good on them.
Good enough to buy though, Suraj.
Look, we still, you can make an argument to buy the companies because they're in that space that's benefiting from the higher gold price. But we prefer playing the gold price via an ETF like New Gold. But for the first time, I think these gold companies are making money.
It's quite interesting because most investors are very averse to buying into the gold mining companies in South Africa. Yeah. And again, pose this question, who's then buying these gold mining companies?
Look, you've got traders out there that take these opportunities, and currently you can trade in and out of the gold companies and make good profits out of them.
Harmony was the only gainer. Well, actually, we've also seen some other, I think it was Renet Investments, up around 0.5%. Harmony up 0.4% as well today.
Not meaningful, but I think it's
112 Rand and 46 cents a share.
If you look at the percentage move. Look, I think it's a safety thing. I think there's so much of global uncertainty that people are just probably looking for safety, and people picking up.
It's interesting because the gold price hasn't really been responding lately.
Yeah.
Why do you think that is?
Some of the analysts are saying that there's a bit of a disconnect. You're seeing the gold price and the equity markets now move in tandem, whereas in the past it was separated. So there's a bit of a disconnect there, and it's just basically tracking equity markets.
Okay, SPAR also out with full year profits. That was up around 3.3%. It's a tough environment right now.
Yeah, competitive environment. I think if you look at the revenue line, it was pretty decent. It was up 10-odd%. But the cost pressures are coming through. What happened is that you've seen there was 10 franchises that were distressed that SPAR has taken into their books. And by doing that, they've lost roughly about 30 million on the back of that. If you strip that out of the cost line, costs were up about 9%, which is something that you probably could live with. Dividend, that was up 4%, so pretty decent dividend coming through. Fantastic numbers coming out of Tops, the liquor side. Good numbers coming out of Build It. And then, the food side is fairly stable. Trading space, that increased by 3%, and there was about 25 new stores that came on board.
SPAR versus Woolies versus ShopRite.
Yeah.
And Pick n Pay, which would be your preferred play?
Currently, we like SPAR. We have been in SPAR for a long time, and it's proven it's done very well for us. But if you look at the valuation of SPAR as we currently sit, it's sitting on currently 19.5, 20 PE. So it's quite rich from that perspective. And you've got increased competition that's coming into that space via Walmart. So it is facing some headwinds. I think they will try and protect market share. They are facing some headwinds. If you look 1 year forward, it sits on a 16 PE. All the food companies are there, I might add, at the higher PEs because of its defensive nature. But to justify buying them right now is very difficult, but we are holders of SPAR.
And what about Massmart? I mean, you mentioned competition through Walmart, but at the end of the day, Massmart stores perhaps don't have such a huge footprint such as the other companies.
Absolutely. And the risk is that if you look at the franchisees that become distressed, and if SPAR doesn't take that, you know, a Walmart can go to the franchisee and, you know, offer him to take that out, and, you know, they don't have watertight agreements with SPAR itself, so they can sell out to a Walmart, and Walmart can gain market share via the franchisees.
Okay, that's a very interesting point. And of course, we also saw Massmart coming under pressure today. Naspers also losing ground. It was down yesterday, further loss of 2.8%. Tencent, of course, it's got quite a big holding in Tencent in China, and profit was only up 13.6%. It seems that this is creating a bit of worry, Suraj.
Look, I think on the revenue line that was positive, but margins are
much higher than most had expected on revenue.
Yeah, I think the thing to bear in mind is that a lot of investors don't understand the internet business. I mean, we as a house, we really struggle, you know, with the internet business. But all you're doing is you're buying management and you're buying the valuation of Tencent on the Chinese market. So when that disappoints, you find that the Naspers share price will come off, and we've seen that happen over the last 2 days.
But this is the weak money that is actually exiting. Could we make that assumption, or do you think that there are actually strong players within this market that are going, okay, I'm hanging up my Naspers boots?
Yeah, look, I think for lots of investors, Naspers has done fantastically well. So when you see a bit of negative news come on Tencent and people decide, you know, to lock in some profits, you know, they're just taking some off the table and probably looking for value.
Is it time to lock in profits though, Suraj, right now? Not that I mean, it really all depends on which stock you've been, stocks you've been invested and exposed to. But the overall market, we are up for the year, but nothing dramatic.
Yeah. Look, if you were in the right stocks, you could have made some good money. So if you were in the defensives, if you look at SA Breweries, British American Tobacco, the telecom companies have done fantastically well. But you know, if you have a look at those companies sitting on quite high PEs, where the value is to be had is in the resource sector. If you look at Bulletin on a forward PE of 7 times, Anglo's at about 6.5 times. But you've got to buy the story that demand from the Asian economies for our commodities will continue. And you know, you could make...
But resource companies have been trading in a very tight range actually recently. And you're talking about it from a valuation perspective, looking very attractive, but they've been like this for quite some time.
Yeah, absolutely. You could argue that people are not buying the scenario where the demand for commodities will continue. But what I'm saying is that's where the value is if you buy the story. If you look at...
Are you buying the story, Suraj?
Right now we prefer to remain defensive because of what's happening globally, especially in the Eurozone. You know, at some point we will be looking to switch out of our defensive stance into more resources, maybe more financials. But right now, given what's happening globally, we prefer...
What would make you make that switch? When you feel that you can go to bed without worrying about Greece and Italy and the Eurozone, or is it about US unemployment? What is bothering you right now?
Look, I think...
Because earnings have actually met up to expectations in many instances.
I think, you know, when you realize that you need to switch, it'll probably be too late. I think we would like to see some stability in the Eurozone, some stability in the USA. Bearing in mind that markets are forward-looking. So if they get a sense that the Eurozone has some kind of solution, although it might take 5 years to sort out, markets will have the potential to run. So you've got to, I don't know how you gauge when that signal comes, but at some point it will come.
You sound cautiously optimistic. I hate to say this because
it's
a phrase
I think the valuations are there. I mean, Bulletin on a 7 forward PE, I don't think it's ever been there. And the earnings are there. If you compare the peak in 2007, it wasn't driven by earnings, it was driven by liquidity in the system. And I think now we're back at that levels, but the earnings are we're much more comfortable with it.